are looking at how far that dirham bought pound will stretch when it comes to property and what interest rate rises mean for that. The Bank of England's raised interest rates to a 13-year high. What does that mean for those of us living here who might own a house there? We are very pleased to be joined by Henry Faun, head of the private office for Knight Frank Middle East. Morning, Henry.
Good morning, Brandy.
So a fifth rate rise from the Bank of England, 1.25% is where we are now. It's not the 8% of the 1980s, but it is higher than people are used to. What will it mean for the appetite for UK property?
For those here in the Middle East that own real estate in the UK or perhaps looking at it, it could mean twofold. One, if they already have a property and it's on a tracker mortgage that will be affected immediately from this, they will instantly be paying a little bit more next month. And as an example, if we had a £150,000 loan, that'll mean that this 0.25% increase will be another £18 per month over 25 years. The second effect, which perhaps is less discussed about, is many in the UK feel this is a good time now to finally bring their property to the market. There's been a lack of supply over the past couple of years, and therefore we've seen more instructions coming on for sale in the UK last month than we have done probably any time in the last 3 or 4 years.
Let's dig into that a little bit more. Why do you think, given the runaway price rises that we've seen globally and in the UK over the last couple of years, are people thinking right now?
Correct. Yes, they are. There has been a race for space globally here in Dubai, in the UK as well. People have been moving from smaller properties to larger ones, perhaps with outside space or otherwise. And now people are returning to the office and returning to the city centres. We're seeing that cool off a little. So that's one aspect. The second one is that perhaps that large jump in prices we've seen across the UK, and that's 10 to 15% of house prices in some areas, which may not sound like a lot in the Dubai context, but for the UK, it really is significant. We're actually for saying now that actually there's more supply coming on, interest rates are creeping up, as well as that wider cost of living, and therefore our forecast for this year is not that same double-digit growth. We're saying single-digit growth now, and perhaps forecasting for this current year UK-wide 5%, Brandy. So we're saying, okay, we may be coming closer to a cooling period.
You talk about that rise in the cost of living. What does that mean for the type of houses that people want to buy? Maybe not at your high end of the market, but we're hearing so much about the rise in gas prices, for example, in the UK, energy in general, the cost of living. What we saw in the pandemic was people trading up, bigger places, more space. You've now got to heat those places. Will it change what people want to live in?
It will be, but this is part of a wider, almost ESG-type conversation. The new properties in the UK that are being built are incredibly effective when it comes to retaining heat and being efficient. Now, that means that it's all new property, but people are still investing money to upgrade their old properties, perhaps with new insulation or even putting solar panels onto their roofs in the UK to make the most of the current heat wave.
Economic growth's fallen 2 months in a row in the UK. You need 2 quarters to technically be a recession, but what would a recession mean for the housing market?
Good question. It would have a wider knock-on to the housing market, I've no doubt. The reality is that those that perhaps have bought a house over the past 2, 3 or 4 years in that race to space, are they going to suddenly run and sell it tomorrow morning? Highly doubtful. So we might see a cooling off time, yes, but will it make a big dent in the housing market for now? We couldn't possibly see.
2008 recession led to a 20% drop in prices in the UK. And like you say, it doesn't happen the next morning, but it happens over time. Your outlook for this year, 5% increase. What's your midterm look? Sure.
If we took a 5-year outlook, across the UK, we're forecasting close to 14%. That's UK-wide houses. If I wanted to drill into that a little bit more, and let's take London specifically, that goes up a little bit more into the 15 or 16% because it's a slightly different market economic there.
So what does it all mean for people living here, British or not, who might be looking at the UK housing market? We've got a very strong dollar at the moment, which means we've got a very strong dirham. Expats often do that equation of, do I buy here or do I buy there? Where is all of this tilting those thoughts?
Sure. Now, the yield on the property in the UK will be less than what you can find in Dubai. However, as Richard just mentioned, we're probably 10% down year on year on that dollar sterling play. So there's a good opportunity there to make a play on the currency. Yes, if you want to send money home. Now, you have to weigh up these factors and whether your long-term window wants to be in the UK for investment or in Dubai. And perhaps if an expatriate here had a 5 to 10-year window, Dubai would certainly make sense for them versus renting. But if perhaps they wanted to diversify away from here and put money into the UK, that sterling play certainly is a good opportunity alone.
And what are we seeing from banks in the UK when it comes to the willingness to lend, and with these rate rises rising, what's on the table in terms of mortgages?
We have seen some interesting changes in the past month or two. Those cheapest possible mortgage where you could agree a fixed term, perhaps at close to 1%, Brandy, which is record low levels, they've been pulled off the table. And we're seeing those coming off as these rate rises continue, and they probably will continue. We're seeing now we can probably fix something today at closer to 2%. The reality is it'll probably creep up from there in the coming few months.
Henry Faun is the head of the private office for Knight Frank in the Middle East, speaking to us this morning on the back of those interest rate rises from the Bank of England.